What's going on, trading family? You already know who it is. James Strong, back with another video, man. So in today's video, we're gonna be talking about how to spot liquidity. We're gonna keep this super simple, man. This stuff is not complex. I keep everything simple. So we're gonna get right into it. Now, a few housekeeping rules before we get started. Y'all know I make all these videos for free. All I ask in return is that you, number one, share the video, man. Share the video on Twitter, Facebook, Instagram. Share the video so we can keep helping more people. Number two, subscribe to the channel, man. Don't be one of them weird people who watch all the videos and you're not subscribed. That's just weird, bro. And then number three, man, make sure you comment. You know what I'm saying? This is a community full of traders, man, looking to be successful. You know, continue to be successful. You finding success. You know, we all looking to change our life financially and our family's lives. You know what I'm saying? So comment. I'm a real person. I comment back. You know, we can have some good conversation, man. Let me know what you like about the video. Let me know where you're at along your journey. You know what I'm saying? So cool. With that being said, let's go ahead and get into it. So I'm going to pick just to show you how simple this is, I'm going to pick a random chart, right? I usually, like, my watch list is basically these five assets, you know? So we have Dow, NASDAQ, gold, GBP, and Euro, right? And of course, I'm a futures trader. Use to trade foreign exchange and CFDs. Now, just futures, you know what I'm saying? So, but the concepts are the same. Once you master one, you can master all of them, right? The price action and the technicals, they're all the same. So let's pick something random that I don't look at. Let's pick this. Let's pick the Russell 2000. That sounds good. All right. So let's scroll back. All right, cool. We'll start. Eeny, meeny, shit. We'll start right here. All right, so we're gonna start on this nice day, right? This is yeah. So we'll start here. So first off, man, like, what is liquidity? So liquidity really is nothing but a pool of money. You know what I'm saying? Keep it super simple. Liquidity is a pool of money. It's where a lot of orders and basically stop limits, buy limits, limit orders, buy limits, sell limits. I know I'm fucking some of this up talking fast, but the point is a pool of money, right? It's where your stop losses are. It's where pending orders are. It's basically pockets of money. So the market is just, all it is money, man, right? And especially with futures, right? I know foreign exchange is different, but these are centralized markets. Now, what that means is for you to buy something, somebody has to sell something. It's the same thing if you go buy some shoes, you go buy a phone, whatever, right? Somebody had to sell it to you. So you can't buy it from thin air. So it's the same here. When you're buying, somebody is selling. When you're selling, somebody is buying. That does not technically mean they're losing. I'm not going to cover that in this video because, again, depending on where they're trading and what they're doing, they could win too. But we stay on liquidity. But it's an even exchange. So liquidity is basically where there's like pools or pockets of money. This can be retail traders like ourselves, or this can also be institutional investors. Now, we don't control or move the market. The institutional investors do. So a lot of times you'll see them either having like big sell-offs or big pushes, like, you know, to go grab liquidity in order to get enough orders, right? Because they have to start basically buying up, right? They want to tank price and make it drop lower. They can't just sell if everybody's selling. So a lot of times they'll start to buy, make the market go up with all the money they have, take out people's stop losses, aka grabbing liquidity and stuff. So basically buy enough of the product, you know, to then take the market down, or vice versa, go down to take the market up eventually. So this is everywhere. It does not depend. It doesn't matter what time frame this is on, right? 5 minute, 15 minute, 1 hour, 30, the 17 minute, the 7 minute. It does not matter. So we're gonna use the hour for this example on Russell 2000. Let me get set up real quick. So, let me get a little line drawn first with some colors. We'll work with that. So we'll use that, and then we'll use a dollar sign. Let me make this green. So this is what we're gonna use for our liquidity, right? So I just want to get that set up real quick for us. Now, where's liquidity usually at? Liquidity is usually at, simply put, where do we all learn, right? Put your stop loss at high points, low points, right? Higher highs, higher lows, internal breaks of structure, support and resistance areas, things like that, right? So where you're kind of trained to put your stop loss usually is where a lot of liquidity is at. So in this example, let's bar replay. Let's back it up because we can't see what happens. I don't really care what happens. So at this point, we want to look at the major swings, major swing highs, low points. And if you're new, don't worry, this stuff will start to be, second nature to you. I remember when I first started, like it was like Chinese. But as long as you keep putting in, you'll get it, right? So let's just map up some immediate liquidity we see. So right here is one. Now this has already been taken out, but I just want to show you how this works, and then we'll keep going forward, and I'll probably just do the whole month for y'all. So there's a major low here, or there was rather. All right. You can see literally, we're gonna start off slow and then we'll pick it up. I'm not in a rush. I want to make sure y'all get this. There was liquidity down here. So let me back it up a little bit so you can even see. This is what happens. So the two main swing points is right here. One is here. And I'll get my little dollar sign. Make sure you know some money up there. And there's one here. Now, all throughout this, there's internal breaks of structure. There's change of characters, what people call chocks. Like I said, we're focusing on just liquidity in this and the overall, right? Once you can master the basics, you can start getting into the details. But the principle is the same nonetheless. So at this time, these are the two main points where the next two main points, right, where orders are. At the top of this wick and at the bottom of this wick, because these are the main lower low and higher low points. So price is going to come to either eventually take this out and go lower or keep going up because they need to fulfill those orders and get that extra money freed up in the market, or they're going to come down here. So let me slow this thing down a little bit so it ain't flying on us. Okay, that's too damn slow. Let me go on back where I had it. So if we fast forward, when it came up, it also made liquidity right here. So I actually might want to click this one by one just so we can get all of it, right? This was liquidity. So it made again, this is internal, right? Not going in depth, but it's liquidity. It came up and the next candle, second one, came and grabbed every order that was right here. So if your stop loss was right here, or anybody's stop loss, it tapped it. Now the money is gone, right? Now they have the orders. But we want to focus on the main ones. Like I said, focus on the main ones and then we keep going. So let's just keep going. They also grabbed that liquidity. There was liquidity here. It grabbed that. Let's focus on the big swing points. So it came and grabbed all the orders that were still sitting here from Tuesday. Boom. That pocket of money is gone. Now they have all the orders and contracts to move the market where they want to, right? They have some freed up to keep going down or to take the market up. So there's also another point here. This is a good swing point. So there's more one here. Like I said, we're not gonna do the whole thing like far back. We're gonna just do it as it comes. I never look at Russell, so this is interesting too. So now technically there's liquidity here, right? It pulled back a little bit, so there's a little bit of liquidity here as well. So we'll put that. Draw a little line. Just copying both of them. Draw a little line. Boom, it's money right here. Grabs that money. And there's money sitting right here. So look, liquidity is going to be everywhere, right? This is not like a one-time thing. Like it's every day. You have to, there has to be buyers and sellers to have this market. Like it's like that's literally all it is. Let's keep going. Boom. So not only did it grab this liquidity, but before it went up, it grabbed all the money that was right here. So first this one, and then this one. And this is notorious too when they're like consolidating. What it shows a lot of times, consolidation shows that there's about to be a big move. Basically, not say about to, let me say this. There's a higher probability for a big move to start occurring. So, came up, there's orders down here. Barely tapped them out. Let's zoom in so you can see it. Barely came, tapped it, stopped them out. Went up again. It actually broke, right? It broke this structure, broke high. This is why it's important. This is why I said we're focusing on the higher time frame and the overall market, not the internal structure. That's the advanced thing, but because internally it broke structure, formed a new high. But they still came and broke this low as well to grab liquidity before going up. So if you would have put your stop loss here, let's say you got in somewhere you're like, oh, we're going up now, and you, waited for a pullback, you still would have got stopped out. Now they grab this liquidity and this one, closed above, and they kept going. So now the chances of it going up are a lot higher, right? And now the liquidity on the swing low part is down here. So we're gonna move this one over. We're gonna delete all this because they didn't got the money, they didn't took off. You know what I'm saying? So the next major point is up here. Let's just keep going. Let's just keep playing. Fast forward. It's a little point, but like I said, we focus on the big one. So you can see they're going to attack this. Is what it seems like. We don't know. So no. So they came, didn't break this high yet. And instead, they grabbed liquidity right here and took that money off the table. So now we still have this one. This point got grabbed as well, just barely. So I'm gonna draw it just so y'all can see it too. Like I said, I'm gonna start off slow, then I'm gonna speed up, but I'm not trying to go fast. I actually want you to grasp the concepts. So if we zoom in, right, that high point, this barely wicked above before turning around. This happens all the time in the market. You're going to see it over and over and over and over. Actually, I'll just move that over because now it's here. All right, so that's the new liquidity point. This little pullback, even this is liquidity. Duplicate it. This little point, right? Because it had this small pullback. So it's like, it's breathing before it goes and takes it out, if it takes it out. And it did. So now it grabbed liquidity. And then it had enough money to have that strong push up. So like I said, guys, this stuff is like all the time. So you can see, what did it finally do now? Once it grabbed all the liquidity that was down here, it finally had enough orders to go all the way up and take out this high right up here. So now they got all the orders, just barely tap. So the same thing it did right here, right? It barely tapped above it and sank. Right here it came, barely tapped above that point. So look at price around like 2,275, right? Barely tapped above and started sinking. All that, man, all that are making money opportunities. You know, when you really read price action like that, and I'm gonna be honest with you, I keep this stuff on here because it look cool. I don't even use this crap. I trade purely price action. Like, I try to do it stuff at first and then EMAs and all that, and they can definitely be helpful, but it's a crutch because it's just data, delayed data, right? So the main thing you want to learn is, you know, how to use this. So let's keep going. This money is now over here. I mean, we just can keep going, man. I want y'all to really get it. I want you to start grasping it, right? Grasp it on the bigger level and you'll get a small level. I'm gonna start going a lot faster though. Y'all want me to go fast or slow? See, I feel like somebody said, hell nah, go slow, James. Don't rush it, baby. Don't rush it, man. I need to learn this stuff, man. I'm gonna keep it slow, man. We slow motion out here. I'm gonna make sure you learn and get your money, man. Cause, ain't no point in no video being, short if you ain't learning nothing. You feel me? So, yeah, man. So let's keep playing, right? Boom. Tap that liquidity. So they got that money. Also, if you look over, what else did it do? The liquidity literally from last week, they came and grabbed it. So when you zoom out, you can see it started to consolidate. We had zoomed in and it grabbed liquidity, grabbed all these orders down here. So there was money here. Let me actually make sure I get all this out for y'all. Here, money here, and money here. And this technically would have been like a what some people would call like a support area, right? They ain't gotta be drawn perfect. I'm just drawing for y'all. Like this little area is kind of like, oh, it's wicking off, it's rejecting. They would have thought this first one probably would have been gone because it broke that structure. But they faked out again and then went up. But it grabbed all that money out the table before it went up. So yeah, it came all the way over here and got this money. So now this liquidity is gone. So where you think it's probably going next? Maybe over here, maybe not, right? We're gonna see. Liquidity here, all type of stuff. So let's keep playing this. Boom. So this had to barely get tapped to get that money off the table. That's a lot of money. It went up for a minute. Perfect little tap before it went off. So let's take this off the table. Let's keep going, man. Let's keep playing. Let's keep learning. Now you already know there's liquidity here too. Like I said, I'm not gonna keep marking everyone up. Because if not, I mean, if I did, I'd be here all day. You know what I'm saying? So that's why I have the resources I do. But that's what I'm here for, right? So let's keep going. Just want us to be a good steward about time. Liquidity right here at the top of this high. Copy that. Took that liquidity, then it went down, grabbed it again, and what did it do? All the way from where we originally started, it came and got it. And this is why, and I mean, not a trend line guy, but right? Look at this. When you zoom out and look at the higher time frame, and this is also why higher time frame analysis is so important. Let me just change the color to blue or something. You could also see like this was when you zoom out, man, you playing the bigger moves. We were just on an uptrend to literally just grab this money. That's all it was. Like this stuff is super simple, but it's still a complex thing, you know. The most complex thing is mastering your own personal emotions, but like it's not that hard. It's just nothing works in isolation, you know. Everything works together. And so you know, finding out, all right, how do you spot liquidity? Now, well, where's there a support and resistance area? Where's there a supply and demand that's there for a good entry opportunity, right? Or also where you need to exit because, hey, there's a lot of orders waiting right here. Depending on if you're looking at level 2 down and you're looking at, you know, orders in the market, right? Well, you see there's a lot of orders up here. There's a lot of activity. Do you want to risk holding your trade past that point? It's when you start applying all these concepts that it can get complex. Like I said, I truly believe trading is simple. It's not easy, but it is simple. You feel me? So there's two different things, man. Those are a lot different. The same thing with fitness. You know, fitness to me is simple. I mean, yo, you eat right, you work out, you know what I mean? Like, and it's simple as that. But it's not easy because we all have different genetics. We all have different body types. You know, some of us have had injuries in the past and things like that we have to account for. And like in trading, that's how it gets with this stuff, man. Like, you know, shoot, like for example, right? You start to find out, like, and this is why I love trading, man. Like it started off, I started doing trading originally just to make money for real. Like, you know, of course, right? Like I sold my business. I went all in with trading. I was like, I've been in all in ever since. But it started off as like, you know, something I was hunting for, you know what I mean? Like something I was just doing to make money. And I started to fall in love with it, you know, because like once you start to like, okay, I can make some money, like it gets bigger than that. And by no means am I saying I'm where I'm going to be or like I'll achieve all my goals. I haven't. You know, I'm growing right with y'all, you know what I'm saying? But I am consistently profitable, right? I do make money on a consistent basis. I want a lot of money. I'm going to be a multi-millionaire trader. That's a fact. But no, man, like when I first started, it was like, all right, it's the money. But then I was like, dude, like, yo, trading teaches you about your life. You know what I'm saying? Like, yo, like, this is really showing me. I thought I was a patient person, but I guess is when I first started. It's like, yo, I thought I was patient, but why the hell, you know, am I getting nervous when I'm 7 minutes in the trade when I'm in a little bit of profit? Or I thought I was a risk taker. Why the hell am I nervous? I'm ready to close the trade out, you know, at a 1-to-1 when my target, you know, my TP is a 3-to-1. Thought you were a risk taker, James. Like, and it starts to really show you what your real personality is, and either you can adapt to your personality or you can change your personality. And so for me, like there's some things like you can change, or some things you can't. So like, again, I'm a fitness guy, you know what I'm saying? So y'all follow me on Instagram, you already know, like, you'll see me a lot of times. I'll have like conversations with my shirt off, just spitting real life advice, man, because I'm a big believer in your words are powerful, you know what I mean, and in your mentality. Everything is your mind, man. Like, you can do a lot of things, man. We really created in God's image, you feel me? So we are powerful. But like, you know, I spit a lot of things, man, just, you know, but there's some things you can't change, right? So like on the fitness piece, you can't change your genetics. I mean, I can't change, you know, the color of my skin, the texture of my hair, the fact that I'm 6'6", the fact that I'm 233 pounds, you know what I mean? I can't change that. Now, I can manipulate certain factors, right? I've been as low as 208 as a grown man. I've been as heavy as 290 something pounds as well. Like when I was like lifting heavy. You can manipulate certain factors. So there's something you can't change. So trading is like a mirror. And I always say this, it's a mirror of ourselves, right? You can be, you know, you can be a great trader, but it may not fit you, right? Okay, change your risk to reward, right? Or change how you respond to it. You know, you can't change how you grew up or whatever, but you can either read and look at why you have certain money issues. This is one thing too I teach people, right? Is to study like, and this is all extra, all bonus, man. Like I know people, if y'all staying this far, man, y'all really serious about this stuff. So I'm giving y'all bonus stuff, man. You know, I love teaching concepts, and then afterwards I teach you like how to really apply them, because learning the technicals is easy, right? But applying it in the real market is a whole different thing. I can show you this for 5 hours, but if your psychology fucked up, you can't do it no ways. You know what I'm saying? So, yeah, man, like, but you can change, like, all right, how do you respond when you lose money, right? You can go and see, yo, like, why do you respond a certain way? What was your upbringing, you know, or how are you with money? Because usually, I mean, again, it's a reflection of your patience, your lack of, your discipline, your personal finance, and your money management. You know, like one thing with me is like, I've been a businessman for a long time, and I've always been responsible for money way before I even started businesses. So like coming to trading, I don't have like risking issues. Like I'm not trying to risk that because I'm responsible. But somebody else who, you know, you get a refund check from college, you trying to go spend the whole thing. Yeah, you can come in this and get your ass whooped. I'm just being honest with you. Like it ain't gonna be that easy for you. So, but you can work on that. You know what I mean? So, and by working on it in trading, it affects your life outside of trading, man. So, you know, I just want to really get y'all those gems, man. It's kind of like Shannon Sharp say, man, you know, you come for the sport, stay for the stories, man. So like for me, man, it's like you come for the trading, bro, but you stay for the real, man. You know, these are real conversations for real situations. You feel what I'm saying? So, man, just tap in, man. That's all I got for this video. I wish y'all nothing but the best, nothing but success. And stay tuned for more videos, man. Until next time, much love.